All-time highs, breakouts. Fear of missing out takes over once again. Stay tuned for a mid-month review. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links from today's video. Also, if you find this video of value and are looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So mid-month, 7:15, the numbers, once again, the anchors, tech and small caps continue to drive us. Dow lags a little bit, S&P mids kind of meandering along, but doing pretty well, all things considered. Next up, sectors. When you see here representing 76%, what looks good? We've already talked about tech, consumer discretion, high-end goods, healthcare, showing some life. We're going to talk about that. Financials and industrials continue to struggle. Let's go to the big charts. All right, so here we go. Our chart we've been showing for some time. Add a little something, and we have a change. The breakout that we've been waiting for. Had our mid-year meeting this year. Thanks for those 60-plus clients who showed up. And when you look here, I kept on saying, here's the box. We've been stuck in a box. Yes, we finally broke out this week. Not with a lot of power. At the bottom there, I added in volume, and you can see 50-day volume of the S&P. We're down about 30% in volumes. Surely not a big thrust, but not really something we see in the summertime as far as big volume, but overall looks good. Next up, a new chart. Here we go. Lots of funky little stuff going on here. But at the top, what it shows us is, one is money supply, or money flow. So you see kind of a push, no doubt, pointing upwards. Not as strong as January, but is pointing up, so that's a good time. The next one down is stochastic RSI. I know we've learned about RSI, relative strength indicator. This shows us that, yeah, we were a little bit overbought, but as you can see, came back and pushed. So I think we have a little bit more room to run here with this current rally, but Fridays matter most. So short-term signals, positive. Mid-term signals, positive. You can see it here in the weekly chart. Looks really good, really strong. Not going to show monthly because you know that's going to be positive as well. So all three signals positive right now for the markets. NASDAQ, big tech, as I've said, has just been a powerhouse this year. And what I've done is, one, at the top or the middle of the chart is the core. All-time highs. Breakout, look great. At the bottom, I added internet stocks versus S&P, surging up. Software companies, surging up. Looks good. And then the next chart just shows NASDAQ relative to the S&P, meaning how's it performing relative to the S&P? Pretty strong. So it tells you there's obviously better opportunities now in the short term in here at the bottom. MACD momentum pointing up. Hopefully another reason why we've gotten off to a strong start into this quarter and continue to be overweight tech. Global synchronization, again, what is happening? Emerging markets, kind of meandering along. Not much of a move so far this quarter, but really the big story continues to be China. China is the big dog. We'll show some charts in a second. We had a death cross in emerging markets, death cross in China, way before we got all this trade noise. So China's been slowing, and that is a big issue. Now, did have a bump there. Let's see what happens, but don't see a lot of good signs coming out of China right now. Don't forget, Wealth and Wisdom viewers, our younger viewers, we've created a new plan for you, our Wealth and Wisdom financial plan. Information below. Check it out. So, overall, let's look at the trends. U.S. equities, 10 of 11 in an uptrend, up from 9 2 weeks ago. International, 5 of 53 in an uptrend. That is ugly. as a group, they are down. If you have not watched, I put out a video this weekend. Do you have to own international and emerging markets? Michelle will put a link up here, and I say no.
No, no, no.
Because we're out of that right now. Next up, tweets of the week. So first up, Northman Trader, great follow, very smart. He's on CNBC a lot. But this trade talks about the M1 money supply. Don't worry, I have links below on what that is. But basically, it shows you money in motion, physical currency, coin, etc. So where is the flow? Now, obviously, you can see this trend here is going to the downside. So what I did was I went on to the Fed website, reran the chart with some different dates, going back to some previous recessions and or crashes, and you can see it's a leading indicator as money supply goes down in 2000, in 2007-8, and now we're trending down again. This can be a concern. We'll continue to watch this for our clients and viewers. Next up, odd stats. Again, love this guy on Twitter because he puts out odd stats. S&P set a new 100-day trading high for the first time in over 100 days. So here's 7 times that it's happened in the last, 7 times in the last 20 years. And bears focus on the first dot, bulls on the other 6. So very interesting. Let's see what happens. Last but not least, bring a little fun to this. Stock Cats, another one of the top follows on Twitter. Bob Farrell, rule number 9, when all experts and forecasts agree, something is going to happen. So this shows you top sector buys from somebody on CNBC the other day. Great follow, and have a link below. Next up, let's get into treasuries. So this has been a big story. Talked about this with our mid-year meeting. 10s -2, 10-year -2-year. Doesn't matter until it does. Boy, it's starting to matter, folks. Take a look from the beginning of the year. That trend line, I'll have Michelle focus in on the bottom. So generally what happens is short-term treasuries, 2 years, are rising faster than long-term treasuries. You can see it at the top of the chart where I've got 2, 5, 10, 30, but we're down to 0.24% spread between 10 and 2. And this is an indicator, if we go negative, inverted, that generally shows signs of a recession coming. So continue to watch that. Next up, on my radar. Okay, on my radar, second half, we started out with healthcare. I like the way this was setting up. Added it in some positions. This was at the beginning of the quarter. Even though it didn't look great, you look at relative strength pointing down MACD, and this is why you look at the charts, but you found a bottom there on the 50 and 200 day, and here's last week. Look at that breakout. Not only did it break out, above that, we continue to move higher on Friday. Everything now is pointing up, getting a little bit to the overbought situation, but healthcare looks good. How about financials? Not good. Not good at all right now. Interesting. Really have removed or reduced positions here. You know, generally with rising rates, okay, you're going to see the bank indexes go up. But a couple things have happened. One, earnings have not been great for the banks, which is unusual. So most importantly, had a little tiny death cross the other day. 50-day going over the 200-day moving average. Really going to watch this week, so going to continue to hold here. Next up, what keeps me up at night? All right, so we talked about emerging markets and China. Lots of articles. China reportedly looks to hit back in other ways to latest U.S. tariffs. See, at this point, the balance is there. They can't put any more tariffs on us. So they need to do something. I don't believe they're going to do anything about treasuries. They are the #1 holder of our treasuries because they don't want to rock that market. You know, and here's an article here from Bloomberg. China's cooling economy spells trouble ahead of global growth. Got a little ad there, or excuse me, hit a cartoon there from Hedgehog. And just this morning, Monday morning, U.S. stocks resilient in trade spat. sparking complacency fears. And I would agree with that. I mean, this is not a resolved situation by any stretch of the imagination. So not a lot keeping me up at night right now, but this really has me concerned. Next up, we're coming into earnings seasons real big. Haven't shown this chart, usually bring it out quarterly. It's going to show you the S&P. Got to go this way. Camera's actually the other side. S&P going this way. And in the background, the blue is GAAP earnings, generally accepted accounting principle earnings. Went back to 15, good snapshot, flat, went flat for a while, up in 16, 17, and obviously meandering along this year. But what you see is the S&P's up 35% over this time frame, and as of expected earnings, about 8.95%. Remember, it was 1 and 3.7 the last 2 quarters. So you've got a big break there between earnings growth and the growth of the S&P, because that's how we buy companies. Future earnings looks really stretched here. Speaking of earnings, big week this week, starting today. So we're going to see what happens. Here's a chart here from Earnings Whisper. Good site to see what is coming out every week. Get yourself prepared. So earnings, real important heading into this midweek here. Wrapping things up, fear and greed up to 47 from 40. Still kind of that neutral zone, although we see some obviously push here in the short term. Again, signals, short, mid, long term, all positive. Now, we are getting a little pricey, so got to be careful of our entry points, but all signs are positive right now. As always, thanks for watching. Michael Loftus, Wealth and Wisdom TV.